Good afternoon, my name is Jordan Lambert, market analyst at Jalatoba Management. Gold embarked on a tremendous rally last week, reaching as high as 1379.48, sparked by a huge equity sell-off in the US markets on Thursday. The sharp fall in stocks was attributed to a few factors. Computer giant Cisco announced that they will be cutting 4,000 jobs, citing difficult economic challenges, and retail bellwether Wal-Mart missed sales estimates as well. And these news releases forced the Dow Jones and the S&P 500 indexes to break technical support levels, and this actually triggered further declines. A 15,000 drop in US jobless claims, taking it to 320,000, the lowest since October 2007. Also contributed to the stock market's plunge as it raised the odds of a trimming down in stimulus this September. In the light of growing expectations that the Fed will begin reducing the bond buying, gold would normally fall too, being the stimulus dependent asset that it is, but the yellow metal managed to succeed through investor uncertainty, and probably because of a realization that stocks at the moment probably hold little value and stock markets are extremely overbought. Also, the strife in Egypt undoubtedly has been the impetus for some safe haven interest in gold, and the violence there looks like it could continue for the next several days, so this will be supportive of gold. Main data releases to be mindful of this week are US existing home sales on Wednesday. There's a bunch of manufacturing and services data from the Eurozone and US jobless claims on Thursday, and then we have the US new home sales data to digest on Friday. Last week's impressive US jobless claims was a big impact on equities and strangely benefited gold as well. So the market will be eagerly awaiting to see if the trend in this improving jobs market continues. Right, now let's just quickly take a look at the technical analysis side of trading. So on the gold market, I have just got the daily chart up right now. So we have a long-term bearish trend line here. If I zoom out, you can see that it's connected by about 3 points. So price is not far from there at the moment. At the moment, price is around 1381. So as price intersects with this trend line, that could be a potential shorting opportunity. But we also have resistance at 1394, and also we have more resistance at around 1423, 1420. All right, so if price intersects with 1394, maybe at the same time as intersecting with the bearish trend line, that could deliver a strong bounce indeed. Also take into account whether the Bollinger Bands or stochastics are generating a sell signal as well. On the downside, we have support at 1347. This was a former resistance level, quite a strong resistance level, and very often when we see resistance levels broken, they then act as support. So if we see a retracement down towards 1350, 1347, definitely look for buying opportunities because it could very easily bounce. We also have support here down at 1270, but this does seem like a far distance away at the moment, but it's still good to bear in mind about this level just in case price does ever drop to this level again. Right, so support levels at 1270, 1347, resistance at 1394 and 1420, 23. Let's also just put on the Bollinger Bands as well. At the moment, Bollinger Bands are signalling the market is overbought. If you can zoom into a shorter time frame as price starts to approach this bearish trend line or 1394 resistance, zoom into the shorter time frame and see what the Bollinger Bands are indicating. If we see a shooting star accompanied by price coming back within the Bollinger Band, that might be another good opportune time to sell. So we're just trying to gather as much information as possible to work out when is the best time to sell. But it's likely that price, because market's looking quite strong, it's likely price will go a little higher before deciding to return. So that is pretty much the analysis today. Look to sell around 13.94 wherever it is for the bearish trend line. Look for buys around 13.47. Thank you very much for listening to me. I'll speak to you again next week.